A self-managed super fund is a type of trust structure that is used to hold people's superannuation monies until they reach their retirement or a preservation age where they want to access that money. The big difference, I suppose, between a self-managed super fund and a industry fund or a retail fund, what are known as APRA regulated funds, is that with those funds, with an APRA fund or with an APRA fund being a retail fund or an industry fund, the trustee of that super fund, you probably are very likely to have never met in your life. And they are effectively the people that are responsible for the running of 700,000 members, for example, at one of the big industry funds. With a self-managed super fund, what actually makes the fund self-managed is the fact that you yourself become the trustee of your own fund, and you're also the member of your own fund. You can now have up to 6 members, so you'd need to have 6 trustees or 6 directors of the corporate trustee, and that in effect is the structure of a self-managed super fund. So a self-managed super fund is a trust where you are the director, trustee / director of the trust itself, and you are also the member of that and of the only members of that specific type of trust. Now, the self-managed super fund is also, it's got some overarching trust rules, but it also is mainly controlled and dictated by the superannuation legislation, which differentiates it to normal family trusts or unit trusts, for example.
Okay, so you've got an entity there that is different from an APRA fund, and it's also different from a standard trust. So it's a very specific type of trust you've got there. John, you mentioned you can have up to 6 people in that self-managed super fund. Is there any requirements in terms of the relationship between those people, or could it be just any 6 people, or how does that work?
It could be any 6 people. You don't have to be related at all. There's definitely challenges. This is only new. It only came out 1 July. Typically, it was 4 members in an SMSF. The idea with 6 was the policy around that was for bigger families to be able to get all their family members into the fund. The issues with it, there's a few issues with it, being primarily you're all at different ages in your life, and you probably have different requirements that you want to how you want to spend the money and how you want to allocate the money and when you want to access the money. Especially with illiquid assets, that can prove to be an issue. So that's one of the, and the other part of it is the administration side of it, having 6 directors having to sign off on everything. It's very cumbersome. But there are advantages of it as well. Obviously, combined purchasing power. If you all had a similar goal in mind to buy a big commercial property or a block of land or something like that, obviously the more money in the super fund gives you more purchasing power. So that's probably one of the key advantages of it as well. Other than saving on fees as well, because you can split between multiple members.
Yeah, so the fee per person would be going down. Yeah, understood. Yep. Now that makes perfect sense. Now you've mentioned the self-managed super fund is a trust. Are there any other entities that are involved in the setup of a self-managed super fund, or is it solely that trust?
There's a corporate trustee. Typically, most people use a corporate trustee. So there's when you're just setting up a self-managed super fund, you'd have a corporate trustee and you'd have an SMSF trust deed. So there's 2 entities if you're just setting up an SMSF, a standard SMSF. Yep. If you're using a loan to buy a property, for example, or shares for that matter, there needs to be a separate entity that sits outside of the self-managed super fund, which is typically known as a custodian trustee company. That custodian trustee company holds the assets that are subject to the loan on trust for the self-managed super fund, or a bare trust you might read about on the internet. So there would be 4 entities, effectively 4 entities that are established if you are looking to set up an SMSF to buy an asset using a loan.
Okay, makes perfect sense. That probably takes me to some practical questions for people listening that they might be interested. So I'll just restate the date. Today is the 22nd of July 21, if that video is being watched later. But at present time, in your experience, in terms of costs, we've got the option of setting up a self-managed super fund with just the corporate trustee, and then we look at potentially setting up a self-managed super fund with the additional structures to purchase using a loan. What would be the cost in industry standards to set up those structures and to administer those structures ongoing?
You're using broad brush approach to fees out there. If you're not looking for any sort of advice at all, the setup cost for a corporate trustee with an SMSF trust and someone to set up the bank accounts, register them all for you, do your rollovers, everything you need there, roughly between 1,500 to $2,000, including GST and the ASIC fees. If you're looking to then go forward and purchase, you need to purchase a property where you need the additional custodian, trustee, company, and bear trust. That's usually another 1,500 to $2,000, so about $3,000 to $4,000 all up.
Yeah, that makes perfect sense. On an ongoing basis, your self-managed super fund needs to do a tax return, and then that tax return needs to be audited. Is that correct?
That's correct. So one of the responsibilities for a trustee of an SMSF is to be able to provide financials, tax return, and have them audited each year for the SMSF. Okay. So there's many trustee responsibilities for an SMSF, but that's a key one. And most trustees of SMSFs, well, probably 99% of trustees of SMSFs, I'd assume, outsource that task. They don't outsource the responsibility; they outsource the task. And so companies such as ours would produce the financials, and would produce the tax return, and would have it audited. And so when we would then send them to the trustees to review and execute, and we would lodge it on their behalf with the ATO. So that's the documents that are required on an annual basis, amongst a few others. But the cost to do that, industry standards, around the $2,000 mark for a full service administration and accounting and audits, and accounting and audit.
Perfect, John. That's gold. Last question to wrap up. If someone came to you tomorrow and asked you to set up a self-managed super fund for them, what sort of time frame would you tell them to expect for that self-managed super fund to be operational?
Look, if you're looking, if you know what you want to do, and you're what's called a client-directed, a self-directed client, so I should say, about 4 to 6 weeks to get it all off the ground. That includes the setup of the entities, waiting for the ATO to receive the ABN, waiting for the ATO to receive the ABN, doing the rollovers, having the bank account set up. About 4 to 6 weeks.
The whole thing. That's fantastic. For everyone listening, if you want to talk self-managed super fund with John or his colleagues, we'll have all the details in the video link below. And yeah, let's go from there. John, thank you so much for your time.
Thanks, Yannick. Appreciate it.
And we'll chat soon.
Bye.
Cheers.